Welcome to Matters Financial and Geopolitical from a Frontier. I trust you had a great weekend. It's been rather cold again here in Nairobi. We've hardly had any summer whatsoever. I attended the full year earnings release, Kengen's full year earnings release on last week, and I conducted an interview with the CEO and MD, Rebecca Miano. And that is the first link on Rich Wrap-Ups if you care to have a listen. And I'll also wrote about those results. I'll come to that a little bit later. New Kenya-US route expected to boost trade by 25%. This is this Nairobi-New York route. The flow of goods and services between the two countries is expected to increase by nearly 25% per year. Reclassify Kenya shilling from floating to other managed arrangement. This was the IMF. I disagree. I think the central bank's FX operations are one of the most stunningly, spectacularly successful operations I can find anywhere on the continent. And I'm deeply unhappy with the IMF for saying that. They allow real FX business, limit speculation. I just don't get why the IMF is not seeing this. By 2016, the total value of mobile services for the industry as a whole was 3.3 trillion, 47% of GDP. But that compares to RTGS, which was 26.2 trillion, 372% of GDP. When Bob speaks about the opportunity, that's what he means. He's talking about that gap. My piece over the weekend was Kengen's moment of glory. I attended the much anticipated full year earnings release at the Intercontinental on Friday. This was the second set of results delivered by the Chief Executive Officer, Rebecca Miano, and against a backdrop of what has been an annus horribilis for the energy sector. Rebecca's and Kengen's power of pull was evidenced by the full house and the fact that practically every energy stakeholder was in attendance. The CS Water, Simon Chelogai, said, "I felt it is important to celebrate a Kenya Inc. success story. If there are any organizations of which we are very proud of without any controversy, it is Kengen," said the Cabinet Administrative Secretary Dado. "We remain resilient in turbulent waters," said Rebecca in her opening remarks, and our message today is Kengen has produced good results and a dividend, and the best is yet to come. Let me lay out the earnings. Full year revenue clocked a 4.278% gain to register 45.29 billion shillings. Steam revenue was the outlier at 6.22 billion plus 19.907%. Electricity revenue from geothermal power plants increased by 6%, from 16.1 billion in the previous year to 17.1 billion. Kengen's expansion has been predominantly a geothermal one, and there is plenty more of this resource to tap. You might not have noticed that notwithstanding one of the worst droughts in recent memory, Kengen's supply to the grid was hardly interrupted last full year, largely because of the geothermal strategy. Full year profit before tax firmed 2.487% to register 11.746 billion. Full year profit after tax was minus 12.381%. because of a 57% pop higher in income tax due to the fact the prior year's tax expense was lower, largely due to the effect of the tax incentive investment deduction granted on commissioning of new geothermal wellhead plants. Full year earnings per share was $1.20. Kengen snapped a dividend drought and are paying 40 cents a share, which is a 33% payout, which represents 5.369% in yield versus the closing price on Friday. Share price closed at 7 shillings and 45 cents. The dividend payment of 2.8 billion shillings was important and a muscular signal and will underpin the share price. Other noteworthy points are a 150.638% surge in full year finance income, which clocked 3.341 billion, which informs me that KenGen's treasury operations are now much more effective and that they are able to leverage what is a seriously low average cost of funds, 3.1%. 89% of KenGen's output is renewable, which is truly remarkable. The green economy has a champion in Kenya, and it is KenGen. Now, we're all aware of the travails at Kenya Power, and it really behoves KPLC to carpe the diem and find their Lee Iacocca figure who can turn it around. The parastatal termite economy is on its last legs. It is a material issue for KenGen. What interested me was the growth outlook that Rebecca spoke to. Obviously, the electrification of the SGR is something that, it is diesel at the moment. I don't know why it wasn't electrified at the get-go, but it would be a big boost to demand. Furthermore, there is also a big regional expansion opportunity on the horizon as well. We're looking into regional expansion with the power transmission lines, including 1,100 kilometers Kenya-Ethiopia, 127 kilometers Kenya-Uganda, 94 kilometers Kenya-Tanzania, and 400 kV planned transmission. The demand curve, which has been running at an average of 5% CAGR since 2011, could steepen dramatically. KenGen has a big role to play in industrializing the Kenyan economy. Our per capita electricity consumption is 200 kilowatt hours, 1/10 of what it could be. Energy is a very important component of the leapfrog into an industrialized future. What is clear is that KenGen is playing its role, is ahead of the curve, and its peers, and its execution is also noteworthy. The PE ratio has a 6 handle, ending the dividend drought, and these results leave plenty of scope to the upside. 89% of the output is renewable. As I said, the regional interconnection story is a big opportunity. This is a short video of Rebecca explaining the dividend policy. And I learnt this morning that Kenya Power has paid KenGen 18.5 billion shillings in 4 months, which means that only 15% of the total outstanding is left to pay. Yields on 10-year Eurobonds declined by 0.1 to 7.9% from 8%, while the yield on 30-year Eurobond remained constant at 8.9%. The IMF says Kenya's risk of debt distress has increased from low to moderate. Public debt is projected to rise to 63.2% of GDP at the end of 2018, from 58% in 2017 and 53.2% in 2016. Interest payments on public debt are now nearly 20% of total revenue. Last week, the shilling depreciated by a marginal 0.2% to close at 101.2. IMF is saying the CBR rate has lost its signalling role as interest rate controls have weakened the link between the CBR and bank lending and deposit rates. Nairobi all shares down 14.78% year to date. NSC is currently trading at a PE ratio of 11.9 and a dividend yield of 4.9%. I like this quote from Mir Thakkar: "Price is a creature of the market's mood," he wrote. "In booms it is set by the greediest buyer, and busts by the most fearful seller." I wrote a piece about Kenal Coble saying I think you could get another buyer. The link is there. Richard Quest on mobile banking tax. Is it really the right thing to tax the newest and growing and most vibrant part of our economy? Does that make sense? And that's what I wrote in June when I said, don't kill the goose that's laying the golden egg. It's rather alarming, actually. And thank you for stopping by.